Welcome to the Theo video for Tuesday, February 9th, 2016. I'm Jeff White, and this fragile, feeble market just cannot seem to stop the bleeding. Every single bounce out there has been sold in recent weeks, and that's held true on an intraday basis. We've seen it taking place in just the past couple of days, for example. So yesterday, we saw these big rallies here off the afternoon lows kind of into the close of the day, which erased much of the damage that had been done. But by this morning's open in the market, we had kind of undone all of that late day rally. So that bounce got sold. Even this rally that we saw right off the open this morning, so in the NASDAQ futures, that was more than a 100-point advance inside of 40 minutes time. That got sold. We came back down and challenged that intraday low. Even this afternoon rally came under some pressure late in the day, and that's also visible here in the SPOOs up above. And so it's really been a sell all bounces type of market that we've been in, and it's visible on these daily charts as well. So if you look here at the NASDAQ composite, we're just one day removed from a new 52-week low on an intraday basis. That was set on Monday back here at 42.12, and today it actually did make a new closing low, and it finished at a level that you've not seen this index close at since going back into October here of 2014. That's a long time. The SPX, in today's session, we saw it stay inside of yesterday's trading range, and so it did finish lower on the day incrementally. It wasn't much of a decline. It was only down a point and change, but it did paint yet another low on a closing basis, and it hasn't seen this level of a close since April of 2014. So you've got to go back here nearly 2 years before you can see that the S&P was back in this area on a closing basis. And so we did pierce through that in October of that year, but going back to April, we haven't seen a close this low in the SPX since then. Even the Russell here has, of course, come under tremendous selling pressure. And today, same story with an inside day, but a new closing low here for the Russell, and you have to go back into June of 2013 before you find the last time that we closed in this area for the rut. So it's been a pretty ugly situation out there. I mean, we're caught in the midst of a very nervous market right now, and whenever that's the case, the pervasive market weakness of late has really kept a pretty heavy mood amongst market participants out there. So when the NASDAQ gives up to the tune of 17% over the course of the past 6 weeks, and that's even to the day right here from this late December high. You take the decline even that we've had here going back into last Monday's high. That was about an 8% decline here off of Monday's high. It is a heavy tape, and very few people want any part of it right now. So on the flip side, though, we have seen some pretty sharp rallies taking place, both intraday, as we just looked at on those futures charts of just the last couple days, but also on the daily charts. We've seen some pretty big attempts here at some brief strength. And so there have been some pretty quick rallies out there, and maybe you're of the mind that maybe we could get one. And considering that some of the market's biggest rallies do tend to come in the midst of corrective phases, it's definitely not at all out of the question that we could see a bounce come along. And so if and when one does arrive, you've got to first understand that it may not last, okay? All these bounces here over the past several weeks have been sold, and that's why we're at new closing lows. So keep that first and foremost in the front of your mind. And traders do not tend to forget that type of environment quickly. So I'm not the only one that's mentioning that. However, having seen prices become a little bit short-term, extended here, possibly to the downside, a bounce back may enable some trapped bulls to maybe unload some shares and reduce some exposure as we kind of come back into some recent levels perhaps. And that's also simultaneously going to invite some bears to add a little bit of exposure as well, maybe increase their current short-sided exposure. And so knowing that that's the general mood out there, and not only that all these bounces have been sold, but the next bounce may be kind of in line with what we've been getting, which is another sold bounce. That certainly could happen. That's one scenario that could come to fruition. We need to be aware of that. So if you are among the quick and the nimble, and you're kind of itching right now to get long after all of this persistent weakness of just the past 6 sessions or so, you really have about 3 scenarios the way I see it. And the first is, you could turn to a few of the names that have held up well relative to the broad market. And these generally, they're not the sexy momentum names that you think of, but rather they're names like Walmart, which broke this longer term downtrend line here at the 1st of January, rallied up, pulled back and tested that same 62 area for a couple of days, and cleared even a short-term secondary trend line here to the upside with some pretty nice continuation, made a new recovery high here, and then over the course of the past several days has kind of settled into a bit of a short-term trading range. So, the high here currently is at 67.93, so any pushback above 68, let's say, and Walmart is back on the move, building another leg here to the upside. But overall, it's been holding up extremely well. McDonald's is another name that had cleared this 115 level late last year, pulled back, challenged it for several days here, and then ramped all the way near 125. It has since pulled back, and in the last couple days tested this 115 and held it, and so now it's got potential here to see a little bit of a short-term lift. You can turn to some of the consumer staple type of names, and like a Procter & Gamble, which is now hitting a new 52-week high here today, breaking out above this high that was seen last summer when the market was coming under pressure as well. And so obviously we've seen some improvement here in recent weeks as some money is flowing into the safety of some of these older companies out there. Kimberly-Clark, toilet paper and napkins and things like that. Nothing exciting taking place here, but a new 52-week high taking place. So you could turn to some of these names that have been showing some relative strength. The second scenario is maybe you get long and try to participate in a broad market bounce. And the way that you would do that is to turn to an index-based product. So take, for example, the SPX. You could go into the SPX options and formulate a trade there for getting long in some capacity. You could do it by way of the ES. So this is the E-mini S&P 500 future. And each contract here is going to represent about 500 spider deltas. So you buy one contract here, it's equivalent to buying 500 shares of the spiders, and so you can kind of scale up your exposure according to whatever you're comfortable with. But in the case of the ES, that gives you some very quick exposure to an extremely liquid futures product, and allow you to participate in that lockstep fashion with any move that the market happens to move. You could do that by way of an ETF like the spiders, right, or the Qs. If you're looking for some exposure to the NASDAQ 100. So that's kind of your second scenario. And then the third route that you could go if you're just dying to get long is to turn to some of the names which are deeply oversold here in the short term that really could see, you could say, a more violent type of snapback rallies. And you would turn to some of these momentum names like a Facebook, which has given up a quick $18 here over the course of just the past few days. So a little bit extended here to the downside, and therefore may be ripe for some kind of a snapback move. You might turn to a Google, which has seen a huge reversal after this earnings jump it had seen to create a new high. All of a sudden it's come back down and it has undercut this January low, but it's attempting to kind of slow the pace here of the downside, and therefore that stretched rubber band may offer a little bit of a snapback type of a move here in the short term. Maybe an Amazon, which has seen a tremendous move here to the downside in just the past several sessions. Again, this is before earnings. This thing had run up to 638 and change, and then today's session was down here all the way to 474. So enormous decline here in the short term. But these are the types of moves that are leaving these stocks short term extended to the downside, which is to say they may be able to produce that snapback type of a move, and it's these type of momentum names that could produce some of the largest lifts in a very short period of time. The key, though, to these latter two scenarios, whether you get long by way of an index product or some of these oversold momentum type of names, is that you've just got to be extremely quick on the trigger. Like, you got to be ready to bail out at a moment's notice, and you absolutely cannot get greedy, because if you happen to catch a bounce, you simply just cannot overstay your welcome without soon regretting it to a great extent. So, the weak market environment that we're still caught in right now it necessitates some very swift exits from the long side if you're attempting to play that, and if you're fortunate enough to catch some kind of a move. So do not stick around. Do not hang around, because all bounces have been sold. That is the prevailing mentality, and until it changes, you've got to keep that front and center in your mind. So, anticipating a turn, it tends to be much tougher than trying to wait for one to arrive. So stepping out in front of some of this market weakness that we've had, if you're getting long and you're early, even 1 or 2 days of additional downside at the pace that we've been moving at here to the downside can prove disastrous for those trades. So look for some signs of strength to emerge before you step out there and you get long, because in this game, if you're early, you are wrong. Thanks a lot for stopping by TheoTrade. I'm Jeff White, and we will see you in the Theo chat on Wednesday. Have a nice evening.